Okay, so there's a huge story unfolding right now in the crypto world, and it's all centered around Ethereum. Something massive is brewing, and it's not just another market rumor. We're talking about Ethereum's supply rapidly disappearing from exchanges. It's a big deal, and today we're going to break down the three powerful forces driving what looks like a full-blown Ethereum supply shock. Let's dive straight into it. The core question, the mystery everyone's trying to figure out, is simple. Where is all the Ethereum going? Because the amount of ETH that you or I can actually go out and buy on an exchange has been falling off a cliff. And I don't mean a small dip. We're talking about a dramatic, sustained decline that's caught the attention of analysts across the industry. And here's the thing, this isn't speculation. The data speaks for itself. Take a look at the charts. Over the past few months, the supply of Ethereum sitting on centralized exchanges has absolutely tanked. We're now hovering around a multi-month low with roughly 6.7 million ETH left circulating on public trading platforms. That's astonishingly small when you consider how massive the Ethereum ecosystem is. So again, the big question, where is all that ETH going? Well, what we're seeing is the perfect recipe for what economists call a supply shock, when the available supply of something valuable collapses, while demand continues to surge from every direction. It's classic economics in motion. When there's less to buy and more people want it, things get intense fast. And this time, that demand isn't coming from just one group. It's what I like to call a triple threat: Wall Street, Main Street, and the market itself all moving in the same direction. So to really understand what's happening, we've got to break it down piece by piece. Force number one, the Wall Street wave. This is the big one, the institutional money that everyone's been waiting for. For years, the conversation around Ethereum was filled with wait till the big money arrives. Well, guess what? It's here. And it's not tiptoeing in, it's diving in headfirst. Here's the proof. For the first time ever, in the third quarter of 2025, Ethereum ETFs actually pulled in more capital than Bitcoin ETFs. Let that sink in. The traditional financial world, the banks, hedge funds, and massive asset managers have started redirecting real money from Bitcoin into Ethereum. That's not a test run. That's a deliberate pivot. And when institutions like JP Morgan, one of the largest banks in the world, start accepting Ethereum as collateral, it's a defining moment. That means they're treating ETH not as a speculative crypto play, but as a legitimate, high-grade financial asset, comparable to US Treasuries. You can now use your ETH to back loans. That's a huge signal to the entire financial ecosystem. And the buying pressure proves it. In just a single week, large holders, wallets owning anywhere between 110,000 ETH, accumulated roughly 218,000 Ethereum. That's real institutional money taking coins off the open market. They're not waiting for a dip. They're strategically locking in their positions now. Some analysts have even drawn a historic parallel here, comparing this moment to 1971, when the US left the gold standard and global finance had to reinvent itself. They're arguing that something similar is happening now. Wall Street's old plumbing is being rebuilt, but this time the foundation isn't the dollar. It's the blockchain with Ethereum at the center. But it's not just Wall Street driving this. Force number two, Main Street adoption. While the institutions are buying up supply, the average consumer is starting to use Ethereum in day-to-day life, and this part of the story is accelerating faster than most people realize. Take Walmart, for example. We're talking about a retail titan that serves over 150 million customers every single week. And now they're opening the door to crypto payments. When a giant like Walmart even experiments with Ethereum-based payments, that's not a small step. That's mass adoption beginning to unfold. Then you've got Shopify, the backbone of modern e-commerce. Millions of online stores depend on it. As Shopify integrates Ethereum payments, it's essentially baking crypto into the DNA of online shopping. It's no longer just buying crypto, it's using it. And let's not forget PayPal. Over 400 million users can now send, receive, and hold Ethereum directly in their accounts. No middleman, no bank in between. Just fast, frictionless transactions powered by blockchain. And it's not just corporate innovation driving this shift. When senior figures in the US Federal Reserve acknowledge that digital assets like Ethereum are being woven into the fabric of finance, it signals something much bigger. This isn't a passing trend. It's a permanent transformation in how money moves. So we've got Wall Street institutions accumulating and we've got Main Street consumers adopting. But there's one more powerful force in this equation. Force number 3, the market's technical signals. The charts themselves are telling a story, and it's bullish. John Bollinger, the creator of the legendary Bollinger Bands, one of the most trusted tools in trading, just made his first public call on Ethereum in 3 years. And his message: Ethereum is gearing up for a rally. For a guy who rarely speaks publicly about specific assets, that's a big deal. He's pointing to a pattern called a W bottom forming on the charts, a structure that historically signals a major reversal and potential breakout to the upside. And that's not the only signal flashing green. Analysts are seeing multiple bullish patterns stacking up. Pennants, breakouts, golden cross formations, even setups that mirror gold's massive run in previous decades. It's as if both the technicals and fundamentals are screaming the same message. Ethereum is preparing for something big. So, let's take a step back and recap. We've got Wall Street buying up Ethereum faster than it can hit the market. We've got Main Street using Ethereum in everyday commerce and finance. We've got technical analysts calling for a breakout. And all of this is unfolding while exchange supply keeps drying up. So what happens next? Well, it's the most basic principle in economics. When surging demand meets shrinking supply, prices don't just rise slowly. They can skyrocket. What we're witnessing could be the early stages of a perfect storm. Institutional adoption, retail integration, bullish market signals, positive regulatory sentiment, and a rapidly decreasing tradable supply. Add in the growing volume of ETH being staked, effectively locking even more coins out of circulation. And the result is a market setup unlike anything we've seen before. And here's the truly mind-bending part. Some of the biggest thinkers in finance believe we're all still thinking too small. They argue that Ethereum's endgame isn't just disrupting crypto markets. It's about transforming the entire $700 trillion global financial system. Every loan, every contract, every transaction, rebuilt on blockchain rails with Ethereum as the foundation. So yeah, this story is only getting started. What do you think happens next? Are we on the verge of Ethereum's biggest breakout ever? Drop your thoughts in the comments below. I'd love to hear your take. And if you found this breakdown helpful, make sure to hit that like button, subscribe to the channel, and turn on notifications so you don't miss what could be one of the biggest shifts in financial history. Thanks for watching.